What's the deal with Denny's? This one sleepy chain of more than 1,700 diner-like restaurants have been absolutely on fire, with the stock nearly doubling within a 10-month period from last July to past April. Since then, though, fresh all-time high on April 15th, Denny's has gotten slammed. And I don't mean it's gotten served a nice Grand Slam breakfast. Stock's down over 10% for the year. You know what? I think the recent weakness is about the fear that rebounding gasoline prices could put a real dent in the consumer's willingness to go out to eat. And that fear has caused widespread pain, not just with Denny's, but the entire restaurant group, regardless of whether or not the earnings have been good. And here they've been great. In the case of Denny's, the earnings were just darn terrific. And when the company reported a little less than a month ago, it delivered a 1-cent beat off a 9-cent basis, higher than anticipated. Revenues rose 7.4%. Same-store sales plus 7.2%, plus management raised full-year forecasts pretty much across the board. Let's not forget, gigantic buyback here, $100 million. That could retire more than 11% of the company's shares outstanding. Yet, because this may last, it's affecting the whole group. Denny's actually saw its stock tumble more than 3% the day after it reported. While the stock's recovered somewhat since then, the shares are still basically flat since the quarter. That could be the opportunity. So I think that this may be the pullback that's giving us a nice entry point in a stock that could have a lot more room to run. That's why I want to take a closer look with John Miller. He's the president and CEO of Denny's. Hear more about his company, how it's doing, where it's headed. Mr. Miller, welcome to Mad Money. How are you, sir?
Appreciate having me on the show.
You know, it's funny. We've been behind the restaurants, as you know, and behind Denny's, and it just seems like that it's just been nothing but greatness. And then the stock seemed to have leveled off when gasoline started going back up. But your numbers have accelerated, right? It's clearly, this gasoline thing is not necessarily everything that we're talking about here.
No, historically, it's not correlated at all to restaurant sales, but I think it dipped so much that the story came out, and it was timed with the rise of a lot of people going back to work and going to eat out a little bit more, and so it gave a little bit of a mixed signal.
But to me, the story of Denny's is a remarkable assemblage of people who go there. You have an ARP deal, guys like me, boomers, okay, families, Hispanics, and millennials, of which millennials are the largest group. How are you able to attract basically 4 disparate groups of people?
Well, they're not disparate necessarily in what they want to eat out, what they want to have when they eat out. Boomers, you and I, we're going to be a lot more like the millennials than them like us. They're not listening to the 60s songs unless they're remixed with a little more bass in it. But we eat what they eat. We do what they tell us to do. My daughter is a millennial, obviously. She says, Dad, egg white, spinach, omelet with turkey bacon. I go, okay, yes, dear. And I eat that with her. And then she says, and by the way, your new chocolate peanut butter shake is really good. So on balance, we want choices.
Right. On balance, we've got this, but we have what we have. My mom's favorite, by the way, was the Grand Slam. And, you know, it's sentimental because actually the week before she died, she says, we're having a Big Mac and we're having a Grand Slam. We always went to one on Ridge Avenue in Philadelphia. And to me, it is a memory of things past that we love. I think there's a nostalgia factor to going to Denny's.
I think there's something about that come as you are space, right? It's very welcoming. Okay. Park your title, be yourself, and people need a little bit of that in their life.
Park your title, be yourself.
Yeah.
At the same time, though, the average ticket's been going up. It looks like that you've been saying that the value, moving away from value, going a little bit more expensive, getting some more fixins.
I think the value's there. Now, there's everyday value, price value, right? So we have the 2468 value menu, but then also we've added salmon, better salads, steak to the menu, more entrees that are $9 to $10 or $11. So that's raised the check 5% in the first quarter, but still well underneath many of our casual competitors. So there's great value at Denny's, and that's the attraction, I believe, to the family dining space.
The new look is the old look, isn't it? I mean, I remember the booths. The booths are back. People love that.
Yeah, people do like booths. They also need large party open seating, right? But I think the thing about the environment change is our space, family dining in general, but also Denny's especially, is a 62-year-old brand, and we let some of the space get a little out of date and tired. Yes. So just bringing up the space to expectation is all that it took.
Who are you taking share from?
I think home more than anything else.
Home.
Yeah. I think moms that love to cook is our biggest fear at the end of the day.
Interesting. Okay, because what I was thinking was that perhaps it is McDonald's, because I feel like that people want, you know, McDonald's is expensive when you compare it to what you get here.
Yeah.
But it's not. You're saying it's home. Okay.
Yeah.
Now, when I looked at your social media, I looked at the Grand Slams, the videos, because millions have. So you've got some sort of social media mojo going. Well, how does it translate to sales?
You know, this is difficult to know how it translates.
Isn't it? I mean, both you and I are kind of stumped here, right? We know that it's doing something, though.
Yeah. Well, the clout scores are good, whatever that means, right? Not sure. We have one of the highest clout scores in the restaurant business, which means there's affinity to like us. It doesn't mean it translates to butts and seats. But because we score well with millennials means we're on the right track. And we've had 15 million views of these 11 episodes.
I know.
It's very difficult to achieve, so we're proud of the effort.
The Baconspiracy one. That's the best one because I love it because he has his teeth at the end.
Booth versus Counter is maybe my favorite.
That's a good one, too. I like Booth versus Counter.
Yeah.
You do something that I wish other restaurant chains would recognize. You actually, point blank say it, the franchisees are our customers.
That's right.
Can you explain that? Because I think McDonald's lost the franchisees. I don't want to be too hard on McDonald's this interview because they had a good yield and they can come back. But you have always cared about the franchisees as customers.
Well, I think at the end of the day, the franchisees sign leases, put their money at risk. They create jobs. They are a job creation machine. I think they're the American dream. And many of ours live that dream. A lot of our franchisees started as employees, and now they own their own business. Dawn LaFrida has 75 restaurants. She started as a food server years and years ago. She bought her first restaurant on a credit card. So
we got to get her on. I mean, that's ridiculous. You're going to put her on our show.
Right, so they are the system. We are a franchise system. Right. They take care of the end guest user of our brand, but we have to take care of that.
At the same time, your company numbers are very good. You like to maintain some company numbers. What is your takeaway from some of the company stores doing better than some of the franchises?
Well, the company stores, we kept the best trade areas.
Oh,
right?
So that's what it is.
So they're usually a little higher risk, higher rent.
The good ones in L.A.?
Yeah, L.A. or scattered around the country, upstate New York, same thing, yeah. So
really?
we have some of our highest volumes in this state.
But you don't have that many. Anybody have like 46? And you
a little under 50 here.
Yeah, you have 46 in the state. That means you could use some more.
And 190 in the state of Texas. We could use hundreds more here.
I think absolutely. Well, I think that this is just a great story, and I think that you're going to buy all the stock in before our viewers. I don't want that. I want our viewers in, and you can keep buying. All right. That's John Miller, President and CEO of Denny's. What an amazing turn! What a great place to eat. Come on, Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.